Hello guys, welcome back, and look who I brought here with me, Nathan Bray. Thank you so much for coming here.
Pleasure.
Long time actually, we're just crossing on the corridor and I was like, Nathan, let's do a video together. There's a long time we don't do a video together and people like when we do, because you are more into a technical, I'm more into a fundamental, and we can, blend those topics together and come up with a, a trade idea, or maybe even make some clarity for those people that are trading the Forex market. So welcome Nathan, thank you so much for taking your time.
Well, it's either going to work out in a really profitable trade idea or we'll just end up going to war with each other.
Yeah, and another point is there's a big week ahead. So
it is.
I think we should get right into it, because US is getting right into it with Canada and Mexico, Nathan. What do you think? What's your perspective on that?
Let me ask you this question. If you had to go on a holiday right now, would you go to Canada or Mexico?
Oh, Canada or Mexico?
They're your two choices.
Oh, I can't choose US.
No, you can't. That's the whole point.
I think I would go to Canada then, because it's less worse than Mexico.
Okay.
But if I could pick something,
problem solved.
To US. So yeah, that's the whole question. When you look at, more into a macro perspective, we are seeing US fighting 25% tariffs on Canada, plus back 25% tariffs on Mexico as well. I know it's out of conversation, but 10% on China as well. So just on this weekend, just on the 7th and on the 8th and the 9th of March, as we are just coming into a new week, we saw a few interesting things happening with US, Canada and Mexico. Basically, Canada will fight back with another 25% tariffs to US, and Mexico will fight back to tariffs, but we're not too sure how much yet. They haven't disclosed that information to us. Maybe in a couple of weeks they will disclose, so that would be pretty helpful to see what can potentially happen to the Mexico peso. But my big take here is, imagine if you are US and I'm Canada, and then we have someone else that is Mexico, just so everyone can sort of understand. I am a big producer of oil, as well as any other gas or any other thing that is very, very brutal for someone to live in today's world. And I'm going to export this to you.
Yes.
Right? That will count, and I'm Canada, that will count for 22% of my GDP. Right?
Okay.
Is it fair from you, US, to fight back with me 25% tariffs when only you export 2.2% GDP for myself?
Not really, is it? It's a very small player against a very large dependent entity.
Exactly.
It's kind of like charging your mother a tariff, right? As you're growing up, I'm getting everything I need from this person.
Yeah.
What, now I'm going to fight back with a tariff? It seems like someone's in a non-win scenario here.
100%, and I think Trump will be much more, hungry, and will fight even more stronger in a few weeks or maybe a few months. The first half of this year until June, July, things are going to be crazy.
Okay.
And just to complement here, before I let you talk a little bit more on the US dollar index, that I know you have some very good insights for everyone. When things get wild, when things get crazy, volatile, we know the Fed will going to cut. So the 18th and the 19th of this month, on March, we're going to have the FOMC and a 25% base points, maybe a cut. So I'm going to have more information that maybe tomorrow on my webinar. But Nathan, it's all yours. What do you think about the DXY?
Before we get to that, I just want to continue on what you're saying here, Luca. And I'm wondering, I know Donald Trump's a weaver, okay? Remember on his victory speech, he started talking about Elon Musk, SpaceX, and I thought to myself, he's weaving Elon Musk into his government substantially, and that we've seen, right?
Yes.
Very obviously. So my question then becomes, what is this relationship going to weave into? Like, for example, does the fact that the FOMC and the Fed have said, we'll decide interest rates, you telling me to cut them doesn't mean anything?
Won't make any difference.
Yes. Unless Donald Trump is weaving in uncertainties such as tariffs, picking a fight with Canada, like what's the result? You put a tariff on me, I put a tariff on you. But does it create enough uncertainty to allow the Fed to give Donald Trump and the American people what they really want, such as interest rate cuts? Is that where we're headed?
That's a really, really good understanding, because That's true. Trump can't go and say, hey, mate, cut 25 and then next month 50, okay? I will be waiting for you, otherwise you're going to lose your job. No, they can't. Because Trump has nothing and will never have to do, because that's a lot of conflict of interest to have, a relation with the central bank, any around the world. We do have corrupt countries, but I'm talking about very big economies like US.
Yes.
Trump can't go and say, hey, Jerome Powell, cut 25 base points to make myself glory and then I should be fine. So maybe he's trying to make chaos around the world to influence the cut. That's a very good observation.
Yes, and to allow the Fed to feel like they're saving face. They're not just giving Donald Trump what he wants. They're doing it and create a rationale. So this is why I'm thinking, why go to war against Canada? We all know it's a one-way street. We all know it's a parent-child type relationship.
Yeah.
Why do we need to say that's unfair?
True.
Right? Like it feels like there's some other reason. And I'm not sure what it is, but I'm trying to think about what it could be.
You are the weak guy competing with the strong guy on this call.
Right.
The guy that is the 2 meter high and the guy that is 160 centimeters. So I think there's no much where we can see already the end of it, right? US going to win. So,
correct.
But how and why and what are the things going to happen on this middle of the text of the series? That's something we have to watch the next episode.
Very true, very true. So as far as this US dollar index goes, I know our own senior market strategist Duncan Cooper technically was looking at these imbalances that were going up in this US dollar, especially euro against the US dollar going down. And it was like, this will reverse. And his technical take was, we could see a complete reversal and all these technical imbalances fill in a short period of time. So we're seeing that occur right now. The last one I'm looking at on the euro dollar is up around 110.
Yep.
My question is, once the overbuying of the US dollar corrects, which we've seen, where does it settle? Like from a fundamental point of view, where do you see it settling?
Yeah, that's a good point, because 110 is my view as well. I think euro has been strong against the US dollar. Not against all the other currencies.
So you're saying it continue higher to 110?
Maybe 110.
Okay.
Continuing from now, I think we're trading 108 to 100, 108, 300
Yep.
on the opening today on Monday, 10 of March. But maybe tomorrow, maybe in a couple of weeks, we see 1.10.
Okay.
We see 1.10. And then what's going to happen after 1.10?
Sure.
I'm not too sure yet, but potentially fulfilling the move down back to the correction would be US tariffs and US taxes. Because bear in mind, right, there's a lot of people talking about Bitcoin as well. Bitcoin has had some very, very big volatilities. And I mean, just going to very, very quick here, you can't have huge moves up, 50% move up, 20% move up without a 20% move down. So corrections are part of the game. It's like an equity curve. You're not going to have from 0 to 100%. You need a 0 to 5, 2.5, 6, maybe 3, and then continue to go up. So I think the priority of Trump at the moment is tariffs, first of all.
Cool.
Second would be taxes. And then afterward will be business. And then maybe Bitcoin in the last option. Of course, we have the immigration as well that we can't forget. So maybe the third one would be immigration/business, and then Trump. So there's a lot of things happening. And then after euro dollar reaching 1.10, we would need to expect maybe Russia and Ukraine sign the peace. Okay. And then we don't have more war, and then euro can escalate even further to 1.12.
Wow, all the way back up the top of that range.
All the way back for, yes.
Yes.
If they don't have peace, Trump continues to implement tariffs, China put tariffs on US, and then all the things back again, we may have a very consolidated market on 110, 1.9, 110, 1.9, that area. If we have something that breaks through, like you say, DXY coming back, filling up all the imbalances, euro dollar coming back to 106.
Okay, down to around 106 is the range?
I think the 104, 106 is the range. 110, 15, 16. That's the point, I think, where euro dollar will be trading this year. But don't get me wrong, anything can happen on Trump administration. So anything can go to parity, anything can go to 1.15. Okay, so I think that's my view on euro dollar.
It's a fair point. And can I ask you one more question, right, while we're here?
Yes.
Rather than me doing it out at the desk and annoying you when you're busy.
No, all good.
I want to talk about this CPI data coming out this week on the US. For me, that's the major sort of data-related event. What's your take on CPI? And do you think it will have a big gauge, considering we're very much a political, economic tariff environment?
Yeah, I think we had a chat with previously, Nathan. You know, when we have those big datas, that if you have back last week or 2 weeks ago, we had the Euro CPI. What was the fact on Europe?
It was strong.
It was strong.
It was strong, right?
But then we have US data. What's happening with US data? Nothing. We have PMIs.
It's weak.
It has nothing happening, right?
150,000 jobs creation.
Yeah.
When we're normally well above 200 or as high as 400.
Unemployment high, 4.1, where I've mentioned
Can I just say, Lucas Santos last Friday said to me, Nathan, the unemployment rate is going to go up. So you've got that 100% correct.
Yeah, I think, you know, as the Fed
not by much though.
No, not by much. 0.1. So as the Fed has been saying, 4 to 4.2 is the range for this year.
Yep.
So we were just on the bottom of that 4%. So maybe 4.1, maybe 4.2 in a couple of months we can possibly come back to 4.2.
4.3 and we can have a rate cut, right?
Don't even touch on that, man. I'm already shaking it. There's too much uncertainties. One more wouldn't be good.
Okay.
I'm fooling myself on Red Bull and Monsters already all the night. Anyways, so as I was saying, I think...
He means energy drinks, by the way. He's not having bad dreams.
No.
It's not about Monsters and Red Bulls. He dreams about completely different things to that.
About maybe euro dollar coming to 110 and retracing back to 106. Sure. Anyways, so I think this week's CPI may be coming in higher than what is expected, but won't have much effect on the US dollar because of the macro and the geopolitical that is happening. So if US decides to fight back Canada and Mexico and China and then maybe Europe, because listen, there are, you know, I can't say that this is truly going to happen, but there are some speculations of Trump putting tariffs on Europe, and then it's all over for euro. Okay, euro is going to be very weak.
I heard. I'll leave it bordering on conspiracy.
Yes.
But there was this idea that what happened with Zelensky in the Oval Office was a little bit staged, because he was always going to run back to Europe and they were going to look after him. So they'll look after the Ukraine so that the US isn't dealing with multipolar regions with multiple problems. So it was like they had this weird argument, and then he disappears back to Europe, and the UK and Europe step in straight away the next day. So this could be possible, or it could be complete nonsense.
And just to add, a few days later, he comes back on X, that was previously Twitter, and do an X, a post there saying that, not on this exactly words, but basically saying sorry for what he said, and that he needs to think on the population, and he's ready to work under Trump administration to make the things back to normal.
So for those of you who played Uno, okay, it wasn't a skip card, it was the reverse card that he used. So technically he did have the cards.
He did, he did. We never know what's your opponent card, so that's a good one. All right, so I think we can close on that.
Sounds good.
Thank you so much.
Pleasure to see you again,
my pleasure, mate.
Let's
stay awake, because there's a lot of things happening on the weekend as well. So just now, I was just commenting with the boys here. We have I'm not gonna read the whole letter, but the banks now from US can sort of hold the custody of Bitcoin and other cryptocurrencies assets into the client's account. So that's going to be really interesting. I'm going to talk more about that during the week. Because that's going to have a huge effect into Bitcoin. Maybe Bitcoin 70K, maybe Bitcoin 90K. So we don't know. Let's stay awake, because there's a lot of things happening.
Now, a quick shout out to Vaughan Pete. Now, he's got a question for you, Luca.
Go ahead.
How is it going to affect the ETFs for crypto? Like, how is this outcome likely to affect these ETFs in crypto?
I mean, look, the banks could already buy that a long time ago, and I can't remember. Bitcoin has more than 15 years, right?
Okay.
And we have David from the Crypto Summit, as you guys can call that, on the White House on last Saturday for us, but Friday for US, saying that they don't know yet which ones they will buy. They don't know the currencies they will buy, but Bitcoin is the favorite one. And the reason why he say that is because it's the most stable and that's the longest one. 15 years of data, it's nothing.
That's right.
When you look at other ETFs like S&P 500, NASDAQ, or stocks, or whatever, Raise, or whatever, they have hundreds of years of data. So it's much easier for you to analyze something that has 100 years of data than only 15. 15 years of data is nothing. But my take here is there will be a lot of inflow. So there's a model called stock to flow. You guys have probably heard about that. That is predicting Bitcoin to 200,000 this year. 200,000.
That will affect the ETFs.
That will affect the ETFs. And positively, I would say. Okay, because there's going to have a lot of money fly into Bitcoin, fly into those ETFs that have been, averse to risk, and they most likely will fulfill even more of those movements. So remember, as I say, with a 20% move up, expect a 10% to 15 move down, a correction, and then a continuation up. There's a lot of people saying Bitcoin down to 30K, Bitcoin down to 15K. I mean, come on. Bitcoin was up all the way to 60K, came back down to 30K, now all the way up to 105K, came back now to 80K. What's the point? You can't have the equity curve all the way to 100% and come back. That's not going to work, right? So you need to have those sort of fluctuations. And I think you have to buy on fear and sell on greed. That's my point.
That's very, very true, because you get an over-accentuated greed and an over-accentuated fear.
And right now...
it's just where that fear and greed meet each other,
exactly.
isn't it?
And right now...
how deep a correction. And therefore, what I tend to use in these technical environments is look at the overall trend, and I look for a 62% Fibonacci retracement, like a significant clear out of all the greed. And coinciding with a major level of support holding. And for me right now, that'd be around this 71,000 level.
The Bitcoin, you mean?
Yes, on the Bitcoin chart. So when I've been looking at both short and long, that's how I'll sort of look at significant retracement levels, showing that previous pre-levels of resistance or support, they are holding, and use that as a guide. I think of it like if I'm trading, back when I used to trade, say, 2-cent mining stocks, right? It can shoot up a cent and then it can eventually come all the way back down. Significant moves. Find your level. It may get there or it may not. Okay, that's the risk.
Yes.
But it does certainly provide you an area where if it does hold, that you can have nice risk reward.
And I think just to finish it up the video, because we're taking a bit too long, it was just to take about US and Canada, but I think we may have a little up move on Bitcoin for 2 days, maybe 2 days. And then a continuation back down, because the 80,000 has been a very, 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 very strong support for, I think, a couple of times now. From the situation where we are now, I don't think if Trump doesn't put something on X or Instagram or anything like that, we want to have a move back to 100,000. But if Trump does, sort of post something on his socials, then we may have a back to 95, 98,000. So let's watch the next episodes. Bitcoin has been a good one.
And think about this: X, Twitter. That was the best buy for Elon Musk,
Definitely.
Right? It's going to make him rich because the whole world is just looking at the tweet.
Such a big influence.
What do they call them now? The
X. Such a big influence, right? Such a big influence. A lot of people, a lot of prestigious and a lot of high names are in there. Whatever they say, moves the whole market.
On that level.
So it is a pretty good area to be watching as well. Anyways, guys, thank you so much.
Thank you.
Thumbs up, subscribe, share this content with your friends. And if you want more videos like that, comment down below. If you have any questions as well, comment down below. And just quickly here, Nathan, I will be live Tuesday, Wednesday, and Thursday this week from 5 to 6 p.m. in Australia time. And make sure to join me on the Telegram, because this week I will be posting a few good contents in there, a few good analysis that I haven't been posting for a while. So stay tuned, because there are a lot of updates coming up. Guys, thank you so much. Nathan, thank you so much as well.
And remember, I'll be listening to that webinar because I don't have a choice.
See you guys. Thank you so much.
See you, everybody.